Are you waiting for the housing market to change? If you are, do this now. Welcome in. You want a house, but nobody's selling. Use these strategies while you wait and still build wealth while preparing for home ownership. We can look in different markets or plan to be a long-term or even a forever renter and still build wealth. Yes, you can, with or without the opportunity for home ownership. Now, you've probably heard things like this and more. It's housing gridlock. I'm never going to get a house. Interest rates are up. Housing inventory is down. Housing prices are not falling. And builders, oh my gosh, those guys stopped building during the pandemic. And then you have the cost and size of my down payments growing, and that's like a form of inflation to me. Boomers and others are not selling. These guys, and I'm one of them, are locked in with low interest mortgages, or they just buy with all cash. That's not fair. These are like their golden handcuffs, and they're helping to keep the housing supply low. And then you might think, I'm going to always rent. And if I ever have a chance for home ownership, I'm going to need to win the lottery. And then starter homes, that whole concept, oh, not in America. Well, you're watching What's Next with Money, a program with smart insights to guide your financial decisions. Well, what can we do? Let's go back in time here a little bit. I rented for a long time. First, because I was not settled in my career or potential location. My wife was finishing a bachelor's degree in a new field for her of journalism and communications. She really reset her course. I was getting an MBA part-time while working, and later started studying for the CFP certification while working full-time. And at this point, we didn't need a house. At this time, the interest rates were high, but prices of homes were not. While waiting in a low-cost apartment, we switched apartments to actually downsize and lower the cost, we found one with most utilities covered. This is like unheard of. And that allowed us to save for a down payment. We tried to establish credit with a single credit card and an auto loan. Now, we became credit ready and eventually bought a small 3-bedroom, 1-bath house, just in time to adopt our first child, a cute, energetic little 8-year-old. She's not 8 here, but this is Christy, our first daughter. So where can you wait out a tough housing market? Here's some ideas. Duplexes, build to rent communities. These are kind of new. Low maintenance. They're not cheap, but you're going to have great quality of life, and it could be a good parking place for you. Boarding. Yes, you could rent a room or two in another home, sometimes from folks that are retired. You could rent from your folks. And now we have more zoning laws changing to allow backyard dwelling places like ADUs, accessory dwelling units. Now, what can you do while waiting? Like, let's say you've got a place to live. You can save for a down payment, but first, we advise get and establish an emergency fund. That'll make your down payment saving go much smoother. You can get credit ready. Check your credit record, correct any credit inaccuracies, and work on raising your credit score. And there are great videos out there to help you do this and websites. You can think about designing a life as a renter for a while, for kind of a long term, or downgrade or lower the level and cost of your renting. Now, with less cost renting, more money can go to down payment savings and being ready for home purchases. What I'm saying here is simply try to avoid high-priced luxury rentals, ones with all the extra facilities built in. Maybe use public recreation centers or the Y for recreation and not pay that through your rent. Now, you can also save on utilities. You can pick a rental spot in a large complex where you have tenants above you, below you, on each side, and this will actually help lessen heating and air conditioning bills. And you can check out our rent versus buy calculator. We've got a link here for that. Now, have and pick a rental big enough so that you might not need a storage unit, which is a separate rental cost. Now, we did this because we moved from a small house to a 2-bedroom, narrow, very narrow, 2-level apartment. But that apartment had a tiny, small, unfinished basement. I used that unfinished basement as an office. And we had moved from that small house that I had talked about, all of our furnishings. There were boxes everywhere. And so that filled that unfinished basement, and then I could really have a little camp out office down there. Now, we spent a year looking for a house in what was then higher priced Denver while we rented. Another idea on the storage would be if your apartment provided a garage space, use that instead of a storage unit. But you've got to check the numbers on that. And make sure you have one that is safe, secure, and well locked. Bottom line, you've got to ask yourself, where do you want to live, really live long term? And for economic opportunity, it is good to move. It is good to relocate and reset, and not as many Americans are moving as they did in the past. Now, there are a lot of conditions that cause that, but in many ways, you can reset your financial outlook and path by moving. So it could be you're not in the right place where you are now, where you want to be long term. Now, my wife and I did a search for a bigger urban area from where we lived. We're kind of in a small town, semi-rural area. We both had good jobs, but we ranked 11 cities for relocation. And we got one job offer in our second highest ranked city over here, Denver, where we've been quite a while. My wife got a job there a month after we moved. And I changed jobs from that initial job that brought me to Denver to a better one after just the first 5 months. And it set me into a new career field, more in line with my talents, and it's one I'm still connected with. So this winning city, Denver, for our advantage, it was suffering a great housing recession. It was really out of step with the rest of the country at that time. More people were moving out of Denver than coming in. Now, this is not common in today's America, but things do change. On this channel, What's Next with Money, we talk about markets, investing, and housing, stocks and real estate and other investments. And there's this concept we note called reversion to the mean. All this means is certain markets, if they get too out of whack, they go back to their long-term averages. And this happens time and time again. And this can happen again in housing. Now, in Denver and Colorado, there was a U-Haul shortage. Fortunately, we helped with moving ourselves, paying it all of ourselves. And we had that small house in Kentucky where I lived that wouldn't sell for another 10 months. Now, we had only owned it for 18 months, and part of that was to help us build our adoption-based family when we moved. But the opportunities in a major urban area were great for us, and it was a plan well thought out that we implemented. Not only was renting financially the only option we have in Denver, but it gave us time to scope out and check out the area and where we might want to live. Once that small house in Kentucky sold, we had our down payment. But check this out. Even with that housing recession in Denver, prices for us moving from Kentucky to Colorado were 40% higher. And to compensate for that, to make it affordable, we actually took out an adjustable rate mortgage, so the payments were more manageable. We took our time, but later, a few years later, we refinanced to a 15-year fixed. And the year we rented and waited, Denver prices, house prices kept falling, even though they were still high for us. Now later, prices flatlined for about 3 years before launching a slow, then a remarkably accelerated rise. Now, if you're getting value from this video, be sure to hit that subscribe button and smash the like button. It helps move our content to more people. It's fun and free and helps others learn. Now, the cool thing about homeownership It's a silent wealth builder. If you've got a fixed payment mortgage with a rate that is locked in, we tend to understand that our income goes up over time. As our skills build up, we have more experience, or maybe even change jobs. But here, your housing, financing, and principal costs are fixed. They're kind of flatlined. They're set. Now, homeownership becomes an inflation hedge because of those fixed costs. Now, there are other costs very susceptible to inflation. We've all seen this. And this is the other part of homeownership: insurance, HOA dues or assessments, repairs, mitigation to make the property safer from disaster, property taxes, future closing costs, real estate commissions, moving costs, and utilities, of course. They're all variable. But housing is actually the greatest form of inflation-adjusted forced savings for Americans. Plus, you get the psychic income of living in your home and the stability it brings to a family, and you're helping a neighborhood, a city, and a county, even regionally. So what about down payments? Here are some down payment strategies. There are many down payment assistance programs through the government or different housing authorities. Think of VA, FHA, even a new concept called shared equity. But you want to get second opinions about shared equity, but it could work in certain markets. And then public service housing assistance. So this could be for rental or ownership, for teachers, first responders, rural doctors and nurses. Military housing might involve rent subsidies. And now building has started to pick up, where new developments may be offering incentives, rehabilitation or historic property tax credits or incentives. And folks, if you're going to be a first-time homeowner and you have a Roth IRA, you can pull up to $10,000 out of that Roth IRA for a first house down payment. This is kind of a one-time strategy. Now, what about location and house size strategies? Your commute may change as your job changes. Remember, you can't move your home to lessen a longer commute or if you have to work out of the area. But here, work from home could be really helpful. And if you're older, you might want to sell to downsize. But this often results more times than not in higher costs at a higher level, if you can even find a place. Now, if you're over 62, you could explore a reverse mortgage, but we say this is the last resort for seniors, as covered in our video, Your Retirement Paycheck. Now, you could rent your house that you may own now if you need to relocate or rent outside the area for income, but will that rental cover all of your costs? And your money is still tied up in that home, and you still need a place to live. And of course, one of the old great tips is never buy the most expensive house in a neighborhood. Now, there are downsides of homeownership. Yes, there are. Homeownership can be a silent wealth killer. Now, it's rare, but it can happen, where the housing decision isn't managed well. You ever hear about house rich and cash poor? Now, if you're a senior and retired, it's hard to refinance. You can't, if you haven't set it up in advance of leaving your main employment, you can probably not set up a home equity line of credit or HELOC or get a new mortgage. The same if you're unemployed, underemployed, or my gosh, if you're getting a divorce where two incomes were needed to qualify for a mortgage in the first place. Now, in many of these cases, rents are your way to go. They're more predictable, and you have alternatives. As we've alluded to before, you can upgrade or downgrade the level and cost of your renting. And even annually, you can make that switch. And in my time of renting, I've done that several times, always kind of opting to go down for a lower cost rental that's really going to punch above its weight and perform many functions like storage. Now, when you're buying, if you're buying when it's a seller's market, you might end up being overpaying or needing to sell soon for if there's a job loss or a relocation, health or other family obligations. You're going to say, oh, wait a minute. You might say, hey, Brent, you just said, dude, you had a home for only 18 months, then you moved. You had both rent and mortgage payments for 10 months. What are you telling me? Yes, we did, but we had some reserves and we took what we thought was a prudent risk to reset our career and financial pathway, and it was up. Remember, we studied and looked at 11 metropolitan areas around the country as we made this choice. Now, another downside of homeownership, costly repairs, or maybe you're in a disaster-prone area where some of this is not going to be covered by insurers, even if you can get insurance, like parts of California where they've had these devastating fires, or the hurricane belt in the Florida area, or the Mid-South. You may not be able to get repairs done quickly. The area could be condemned, or FEMA says, you can't rebuild here. We have to deal with cost and a relocation and mitigation, and you may not get that much for your home. Or you could be stuck in a long-term temporary housing situation that's now out of your school area, out of your work area. For more insight and tips, see our videos on personal finance and disasters. And then, of course, divorce creates its own set of tensions and financial pain with housing. Now, you may have bought the most expensive house on the market or on your street. You may have actually over-improved. You could have been on a Home Depot Lowe's binge. And these improvements are not what buyers want, and they might not even be complete, like a half-completed pool. And then it could be a case, and I know people stretch this number, your housing costs would exceed far greater than 30% of your combined income. Now, folks, if we're doing heavy into housing, you're not diversified. You've got all or most of your wealth tied up in your home. But guess what? This is normal, especially in our younger years. And really, for most people, as they retire, their biggest asset is still their home. And of course, the second biggest is probably that payment of Social Security checks that flow in. Now, it's normal. But if you need to pull out cash from your home, if it's all locked up in there, if you have equity, do you have a home equity line of credit? You may have to requalify for that, and then they need to be renewed like every 10 years. If you cash out and do some kind of refinancing, you may be subject to higher interest rates. So those lending costs might rise. You don't have those beautiful low interest rate golden handcuffs. Now, the neighborhood could be subject also for a housing problem to an external event like an area recession, a fire, a civil disturbance, or an environmental or flood incident. So those are some of the downsides, but there are many, many upsides. Now, we rented for the first 5 years of our marriage. We kept costs down, our options up and open. We did miss out on some house price gains in the pleasure of homeownership. But we had to watch our emotions. Absolutely. We had to gird ourselves to not be envious of our many, many friends, some our age or just slightly older, who were starting out but were already fully engaged in homeownership. But this was just not right for us. We had other plans based on the relocation I talked about, and we could watch others. Obviously, their net worth was probably increasing as they owned their homes while we stayed as renters. But many Americans can achieve wealth by other means than homeownership. We cover that extensively on this channel. And if you're on that path, let's say you think you might be a forever renter, and that's okay. But you have something that the homeowners don't. You have a very high situational awareness of personal finance alternatives beyond homeownership real estate. And you can benefit from our wealth building, investing in ownership video playlist, where we talk about investing in equities and investment real estate, in real estate you don't have to live in. Now, housing takes time, and you could be out of sync with the markets, but there may be a market, not in your area and not right now, but that is not so competitive, with few cash buyers and demand that has not caught on. but like the area, it may have really growth potential. Denver certainly did for us when we came in. And, there could be affordable work from home options that allow you to relocate to one of those markets where there's more affordable housing and rebuild your work life there. Now, using these strategies for location, timing, down payment planning, being credit ready, and, these long and short-term rental tactics and tips, we can still build wealth with or without the opportunity for homeownership. So be sure to hit that subscribe and that like button, and don't forget to share. I'm Brent Nicer, looking to see you next time on What's Next with Money.